combat money laundering, terrorist financing, and other illicit financial flows. In South Africa, the Financial Intelligence Center is warning that thousands of businesses could face financial penalties for failing to meet mandatory anti money laundering compliance requirements. To speak a little bit more about this, we're joined now by Christopher Malan, Executive Manager for Compliance and Prevention at South Africa's Financial Intelligence Center. Very good morning to you, and thank you so much for speaking to us, Christopher.
Good morning to you, and thank you for the opportunity.
Let's just first start with South Africa's own laws. Do they meet the international standards? Because I know that they have introduced new laws just around this, but I'm also just wondering if it's more of an interpretation of administrative returns, or really is this really about intelligence tools designed to tell the state where financial crimes are more likely to emerge?
Yes, it's a bit of both. First and foremost, our regulatory regime, which is founded on the Financial Intelligence Center Act, is fairly robust and in line with the international standards. We, in terms of that act, can issue instructions to the marketplace, and here it would be to the private sector to comply with certain requirements relating to supplying information about their businesses. And we do that through a legal means called a directive, and this is what is at play here. So, yes, nothing further needs to be done except minor legislative changes or legislative changes that closes certain gaps. That has become evident in the last few years, and accordingly, we have a bill before Parliament at the present moment that not just changes certain elements of the FIC Act, but also certain other elements throughout the legal framework.
So let's just talk about South Africa's own, anti-money laundering framework. So there is a sense, because there is non-compliance by many companies, and I'm wondering if it's fatigue, or is it a lack of understanding of the framework itself?
Well, we hope it's not fatigue because this should be a daily feature of the business of each and every accountable institutions, and these are the entities that qualify because they conduct certain businesses and activities. They qualify under a schedule in the FIC Act to be known as accountable institutions, and the international standard requires that such entities internationally, they're called obliged entities, we call them accountable institutions in South Africa, must meet certain fundamental requirements, such as understanding their risk. So it could be an element of risk understanding, understanding their risk, documenting their understanding of risk, and then how do they intend, where the risks relate to money laundering and terror financing, what countermeasures or mitigation steps do they intend to put in place. Now, the Financial Intelligence Center Act, the FIC Act, requires this fundamental set of issues to be dealt with in a document called the Risk Management and Compliance Program. So, what we have asked for now is a live rendition of it, in a sense that you have this information. You now need to tell us, what have you done in the last 3 years? What's the size of your business? How big are your clients? And how have you mitigated these various measures? And there's a set of questions. So the questionnaire is a self-assessment questionnaire that they are mandated to fulfill. There are two groupings. One closed the end of June. The next is the end of July. And it's the same set of questions. We've just grouped them so that we could space them out and give the larger set of institutions like lawyers and estate agents more time. So we don't believe it should be a matter of fatigue, because this should be part of their daily um, business activity and compliance management, and to mitigate themselves from being abused. All that we are asking for is, please disclose how you have conducted yourself in the last 3 years. And there is a bank of questions which they need to complete. We have given them advance warning of that, and they need to file this with us electronically. in a seamless process, so there's no paperwork. The only issue would be that do they have this information on record, which we believe they should have, and then they need to transpose that information onto the online platform via the RCR form. So we don't really, and we hope it's not an issue of fatigue because it should have been ingrained in their way of complying with the regime's requirements on a day-to-day basis.
So, if it's not regulatory fatigue, then what are your thoughts on the smaller companies saying that it's become burdensome, uh, particularly because of how technically demanding it is? And that's also bearing in mind that these criminals are also evolving in their sophistication. I mean, away from the shell companies, the cryptocurrency that is used, or the just the very complex cross-border transactions. So how do you make sure that there is a balance so that it is encouraging for the smaller companies, not only the limited capacity, but just so that it's also easy to understand and apply?
Yes. So we have several targeted measures to assist business. We start out from the very foundation with guidance. We issue guidance on the matter, and we have issued, according to the international standard setting body, the FATF, extensive guidance. We are talking here about industries that are non-banks and non-financial. So they are the gatekeepers, such as lawyers, estate agents, the casinos, dealers in precious metals, dealers in precious stones, trust service providers, um, crypto asset service providers, Kruger Rand dealers, and the like. So they are operate in the non-financial space, but they are known worldwide. That is why they are in the anti-money laundering regime for being abused. The criminals, once they obtain unlawful funds or funds from lawful activities, they then channel that funds and seek to disguise the origin of that unlawfulness of the funds through various mechanisms and by buying luxury goods, property, motor vehicles, and the like. And that is when um, our institutions, whether you are an estate agent, a lawyer, may come across somebody wanting to buy very expensive property, but the source of funds is questionable. We then, through our outreach initiatives, we have nearly bi-monthly, twice a month, if not more, webinars where we invite various sectors and known entities that are struggling, because we look at our profiling, we can see who has been reporting to the FIC, we can target those that are not reporting, we invite them to webinars, and we've been explaining this form and how to complete it quite regularly now. So that is the second way we seek to assist them. Thirdly, they can call into the FIC. We've got a call center. And then also we've got a public process, what is called the query process, where a person with a query relating to the form can log on to our website, um, a written question, it gets tagged, it gets a ticket number, we then respond to it as soon as possible. So we've got several methods of seeking to assist the industry. They are not on their own. And we also have been engaging with industry bodies and the regulators as well. And we've just met with the regulators quite frequently. And recently we've met with the Fiduciary Institute of South Africa last Friday, and we met last Friday as well with all of these industry associations, because we are part of the process of preparing for the next mutual evaluation of South Africa. So we are engaging with these entities on a regular basis.
Thank you so much for speaking to us, Christopher Malan, Executive Manager for Compliance and Prevention at South Africa's Financial Intelligence Center. Brings the time to 7:30. Back to the news desk for news headlines. Jwalani Tulo Mwebe has that.
Get Channel Africa on DS.